Some traders mark every other block in the market and do not understand what validates an order block and how to filter out the wrong order block they shouldn't be trading from. So in today's video, I'm going to explain in details what validates an order block and what type of order blocks you should be trading from, and how to filter out the wrong order blocks and the mistakes to avoid when trading with order blocks. So let me switch over to my laptop and break this down for you guys in details. Okay, first of all, I'm going to explain what is an order block. What is simply an order block? Now, an order block is simply a price area where institutional traders or the institutions in the market have placed their significant orders before a sudden push in a particular direction. A particular area, like I said, where institutional traders have placed their entries or their positions before a sudden push in the market. Now, let me explain how we can highlight an order block. Now, if you want to highlight an order block, an order block simply means where you see a particular opposing candle before a sudden push upward. Like for example here, let me explain here. If you look here at this particular zone here, you will see that there's a red candle. This red candle was the only candle before we start seeing this huge bullish movement upward. So this candle here is our order block. It's simply our order block because this was the last selling candle before the sudden push upward. So that means institutional traders have placed their orders at this or their positions on this particular zone. So what you simply do is wait for price to after the huge movement up, you wait for price to come back and you see it perfectly retested it, and we are right now moving upward. Okay, I'm going to explain what validates or what are the requirements or what validates an order block, what you need to know to validate an order block that should be used for trading, because it's not every order block you see on the chart that is suitable for use or for trading. There are rules that validates an order block. Now, the first rule is that your order block will have a BOS. A BOS simply means a brick or structure. Now, what we mean a BOS, something like this means, if you look here, like this one I highlighted, you can see this right here is a brick or structure telling us that price is currently in an uptrend. Telling us that price is currently in an uptrend. Now, if you look at after this BOS, what happened? Then we saw this huge push upward. Then price came back and retested this our order block. Then before we saw this movement that's going up right now. So your order block must have a brick or structure, as you can see here, a BOS, a brick or structure. And also, it must cause a major displacement. Now, when I mean a major displacement, I mean this sudden push upward, because if you look here, the bullish candles here are very huge. As compared to the bearish candle here, the bullish candles here are very, very huge here. So this is what we call a major displacement, because after this candle, you can see the next bullish candles that follow through were very huge. So this is what we call a sudden or major displacement. So these are what validates this order block, and this is why this order block right here held very well and price is moving upward. Now, let me identify more order blocks on the chart here for you to understand. Now, let me identify more order blocks on the market here for you guys to understand. Now, let's keep checking where we can see an example. Let's keep going. Let's keep going. Let's keep going. Let's keep going. So let's keep going. Let's see if we can see a bearish order block. A bearish order block. Let's see. I want to give you guys an example of on the bearish side, because we've seen the bullish side. Now let's check for the bearish side. Let's see if we can get anything. Okay, now if you look here also, now this is for the bearish order block. Now you see that what we saw here was a shift, a brick or structure right here. We saw a brick or structure. Then what did we see? Where's our order block? Guess right here. This was the last candle before this huge bearish movement. Now, some of you may say, oh, this is a bearish candle. Yes, because sometimes an order block may not simply mean a bullish candle. Sometimes it can be that particular candle, either a bullish or a bearish candle. I get. So it may not necessarily be that particular opposing candle before the push. So this right here is our order block, and it caused a brick or structure right here, and we saw this huge displacement, this major displacement right here. Then price came back, retested it, and it went down. So this is how you highlight an order block. Now, number two rule that validates an order block is that it must have an imbalance. It must have an imbalance or an FVG, which means fair value gap. Now, in my subsequent video, I'm going to break down and explain what I mean by imbalance in more details. Now, if you look here, let me delete this right here. If you look right here, you will see this huge gap here, this huge gap right here. Are you seeing this gap here? This gap, this gap right here in between these two candles. Because if you want to identify an FVG, is a three candle formation, 1, 2, and 3. Now, this huge gap is caused by the difference between the buying and sellers right here. So they show there's an imbalance here. There are orders remaining here for price to come and fill. So there's an imbalance. So price, this is what attracts price to come back up. I get me to fill these orders, and we see the huge drop. The huge drop downward right here. So your order block must have a fair value gap. And number three, also your price must leave aggressively. Price must leave aggressively to validate your order block. As you can see here, when price after this break of stop, price left here aggressively with huge momentum. So these are what validates an order block. And number four, your order block should be clearly revisited. Your order block must mitigate clearly when revisited. Now, if you look here, when price came back here, what happened? It tapped here, it pushed back up, giving us like a lower. If you go to the lower time frame, this can be a confirmation here. It tapped on it, then we saw a sudden push downward. Number one, I say your order block must have a BOS or cause a major displacement. Number two, it must have a fair value gap, this gap here. And number three, price should leave aggressively, as you can see here. And number four, price should come back and mitigate it clearly. Then before we see this huge drop downward. Now, what are how can we filter an order block? How can we filter an order block? Now, let me explain clearly here. How do we filter an order block to make sure it is the right order block we are using? Because not every order block is suitable for use. Let me use this one to explain again. Now, your order block, any order block that does not have a BOS should not be used. A brick or structure should not be used. So your order block must have a brick or structure. And also, it should not be mitigated at all. It should not be mitigated at all. What I mean by mitigated means, for example, let's say if price had come here, like this place here, there's a price pushed up, then it came back here, maybe, and tapped on this zone here, then it pushed up. Now, if you're expecting price again to come back here again, price will not hold again on this place because this order block here has been mitigated by this. So it will not hold. It may lead to loss. You can either push down or hold with huge force and you lose your trade because it has been mitigated and it is not valid. So if you want to filter out the order block, it must cause a break of structure in line with the market direction, and it should not be mitigated. Price should not mitigate it. And when I mean mitigated, price should not tap on it on that particular zone right there. Now, what are the mistakes to avoid when identifying a valid order block? The mistakes you should avoid is number one, you should not mark every order block on the candles. Not every order block you see here is valid. Not every order block you see here is valid. Most especially when the market is moving on the particular direction, you should trade order blocks majorly based on that particular direction. For example, as you can see here, prices is forming higher highs and higher lows, which means the market is clearly on a bullish trend. Now, if you come here and say, okay, this is a BOS right here. This is a BOS right here. Now, okay, let me drag this downward. Okay, this is a brick of structure right here. Then let us sell from here. Now, this is another block. Based on what I told you guys, this is another block. It has a fair value gap right here. You can see this fair value gap here. See the huge fair value gap. Now, you wait. Okay, the price came pushed back up, but it failed. This other block failed. It has FVG or a fair value gap, but it failed. Why? Because this is not a proper order block you should be trading from, because the market is currently on a bullish trend and you're supposed to be looking for valid order blocks that are buying at that particular time, not selling this particular market. Now, if you look at this, was a failed order block. So you should not mark every order blocks on every candle. You should trade order blocks in line with the market direction. Now, number two mistake to avoid is do not ignore the higher time frame. Now, if you go to the daily time frame, I believe this market is currently very bullish on the daily time frame. Now, this is the 1 hour time frame. So once you come here, you should be looking for order blocks that are buying, not selling. You should not be selling when the order block. You should not be selling on the lower time frame when the higher time frame is buying, or buying on the higher time frame when the lower time frame, or Buying on the lower time frame when the higher time frame is selling, you will experience losses. So you should walk in line with the higher time frame bias or direction. So if you look here, like okay, this example I gave you guys right here. If you look at the, okay, let me give you this one. Look here, see an order block right here. And what happened? It held. The order block held here. It caused a BOS. It caused a BOS here, right here, a break of structure. Now what happened after this break of structure? You see that price came down here and tapped on it. And if you place your order here, if you came here and place your order, your buy limit order, and you put your stop loss above here, your target, let's say, is high here, you would have made clean profit of just knowing order blocks alone. This is the power of order block. Now, number one, I said, let me recap again. I said, for you to know a valid order block, it must cause a break of structure and it must have a what? An imbalance. Then number three, price should leave aggressively, that means with huge momentum. And number four, price should clearly mitigate it cleanly, then we see the huge move upward. You see, price should come back to mitigate it cleanly, then before we see the huge push upward. Now, how do you filter an order block? How do you filter an order block? Now, do not trade order blocks that do not have a break of structure. You should not trade order blocks that do not have a break of structure. And also, you should, number two, you should not trade other blocks that have been mitigated already. Like, for example, you look at, let's say this has been mitigated, now you're still expecting this other block here to hold. Maybe you drag it like this, expecting this to hold. It will never hold. Price will just come here and you just lose. And take out your stop loss and you just lose your money. Now, the mistakes to avoid when trading other block is not every other block on the chart should be used or is suitable for trading. I get me. So you should mark valid order blocks that are in line with the market direction. Now, number two mistake you should not make is do not ignore the higher time frame. If the higher time frame is buying, go down to the lower time frame and look for valid order blocks that are buying or that are in line with the market direction at that particular time. Or if the higher time frame is selling, go down and look for sell order blocks on the lower time frame. Then number three mistake you should not make is do not trade from other blocks without confirmation. Like for example, let's say if we go down to the 15-minute time frame here for this zone here, if you go down to the 15-minute time frame, maybe you want to get more information from this particular zone I highlighted here. So let's go down to the 15-minute time frame. Let me see if I can break this down for you guys. We are having network issue right here. Network. Let's see if I can break this down. Okay, that's sure. So where's that zone? Let me see if I can see that zone. Okay. Now, I said the one mistake you should not make is do not enter without confirmation. Now, I'll make more videos on this imbalance and some other confirmation you need to check out here in more details in some of my other videos that are coming or I will upload soon. Now, if you look here, those of you that use maybe chart pattern, this is a very good confirmation. You see, price came back here. It tapped on it, it pushed up, it tapped on it, and give us like a double bottom. Then before we saw this huge movement upward. So this is like a double bottom right here. And this is a very good confirmation to buy this market at this particular time. So this is a very good confirmation. So you should not enter without proper confirmation on the lower time frame. So that's it for this explanation for today. And I'm going to make more videos on this and explain this in more details for you guys. So make sure you like this video, share this video, and subscribe to my YouTube channel for more amazing videos. Because you're going to get lots of values of this on this particular channel. So make sure you are subscribed, and I'll see you guys in the next video.